What's up, guys? I'm Mason Rad, and I've been a real estate agent here in Los Angeles for the past 8 years. Are we in a housing bubble that's going to burst? This is what's happening. The S&P 500 has dropped over 20%. Interest rates are rising as inflation spirals out of control. Everyone is calling for the demise of the only asset that's still holding its high price, and that's the real estate market. There are worries that the housing market is in a bubble and that it may soon burst. Google searches for the housing bubble surged this year when the Federal Reserve raised its benchmark interest rate, setting mortgage rates on an upward trajectory. They are doing this to help counter skyrocketing inflation. So they must think that we are in a bubble if they are doing this, right? I mean, a bubble occurs when the value of assets skyrockets for some irrational or some other reason that are not related to fundamentals, such as inflation. In the midst of the pandemic, prices of homes soared as people looked for places to stay comfortably, as they spent more time at home, also due to the fact that we had cheap debt that we enjoyed for several years. Yet things are changing, and they're changing fast. Just days ago, Jerome Powell dealt a severe blow to the housing market, reinforcing the belief that there will be a U.S. housing market crash. In an effort to combat inflation, the Fed had raised interest rates for the first time since 1994. Federal Reserve announced a rate increase of 0.75 of a point. That's triple increase of 75 basis points. In addition, it indicated that rates may rise again later this year. The Fed's tightening monetary policy has led to an out-of-control increase in the mortgage rates. As a result of these rate hikes in the last several days, the 30-year fixed mortgage rate jumped from 5.5% to 6.3%. It has already doubled since the end of 2021, and it will continue to increase. What does this mean for potential home buyers or anyone looking to invest in the real estate market? It's a sign that the housing market will be cooling down. But does it mean that the current supposed housing bubble, which has been building up for over a decade, is about to burst in a way that we've never seen before? Can we expect a depression similar to 2008, which will bring prices back to pre-pandemic levels? The price of homes has been rapidly increasing for the last 2 years. Currently, the median cost of a single-family home in the United States costs around $415,000. The cost of homes has gone up by around 40% since 2019. In some areas, the number is much worse, and in others, a little bit better, but the overall post-pandemic market has grown like crazy. Another thing to consider, since the start of the pandemic, home prices have been on a tear, leading to worries about the market's fate. Census Bureau and Department of Housing indicates that the median home prices have risen 27% since spring of 2020. And if you look at the data closely, you can actually see that prices dropped slightly for the first time since the fourth quarter of 2021. And that home prices might continue on this trend, but of course, let's view other evidence. Let's talk about one indicator that has so many people worried about the future of the real estate industry, and that's the stock market. There's no doubt that the stock market is extremely good at predicting future conditions. Some people pay specific attention to the recent downturn on Wall Street and the dramatic shift that caused most experts to turn bearish. At first glance, the decline of the prop tech companies' shares combined with the soaring prices is a double signal. In the near term, prop tech stocks like Redfin, Zillow aren't looking so good. Neither are most tech companies, and there has been a 90% decline in Redfin stock, an 85% decline in Zillow, and 87% decline in Opendoor. No wonder that talks of a housing bubble burst have gained momentum. I mean, it seems super likely that a crash is imminent. All evidence is suggesting that we're on the brink of the biggest housing bubble of all time, and it's collapsing right in front of our eyes. It's true that some people wait for real estate inventory to spike and remain patient. I think it's going to be a buyer's market for the first time in a long time soon. But people who want to gain momentum and wait until the prices crash may be up for a disappointment, and here's why. Over the last 2 years, a few things actually went down. Stocks, crypto bonds, and Bitcoin might be some of them. All other real and usable assets are going up. Here's something to think about. A gallon of gasoline in June 2019 cost $2.73. Today it costs $5. That's an 83% increase. The price of food, gas, oil, used cars, even Big Macs has gone up. Real estate is no exception. The truth is that housing is still expensive, but not as bad as it once was in 1980 because of incomes, interest rates, and also prices went up considerably. The affordability index confirms this. But guess what else? While there was a recession in 1970, wild inflation in 1980, and dramatic geopolitical events in that time period, house prices have increased significantly. They were never crashing to pre-1970 levels. In other markets, prices simply skyrocketed. For example, oil went from $3 a barrel in 1970 to $40 a barrel in 1980. That's a 1,300 times rise. As a final note, I'd like to say that the dramatic rise from 2% rates to 7% rates will certainly slow down this roaring market. In some heavily overpriced areas, there might even be a decline in prices, but the median home price in the USA won't change that much. There's a possibility that those who wait will end up like those who predicted 2020 would show a massive drop in prices, where prices went up then, even with higher rates. As everyone knows, in the United States we get a 30-year fixed mortgage. That can be refinanced at any time. Throughout the life of the loan, you can always shop for a better deal, while the bank remains frozen at its agreed rate. Even if rates rise dramatically, and given historical trends, rates will eventually drop, while home prices will continue to rise or remain more or less the same. As long as demand remains high, that trend is likely to continue. As millennials and Gen Z form new households, they place a greater emphasis on home ownership. The demand for housing has not decreased, but inventory has declined. Of course, there are some localities where the prices are overblown and the price drop may be more visible in these areas. There are several factors that can affect home sales, including favorable tax laws, lower local living costs, and the movement of people fleeing more expensive cities during the pandemic. There are some trends that are shaping the real estate market today. First of all, construction of new homes continues to rise, meeting demand. As a result, new technologies, production costs are decreasing. Home printing, anyone? Another factor is that most of the housing stock in the US is owned by baby boomers who are aging and moving out of their homes. The housing market will be affected by all of these things over time, but none of them are going to happen overnight. In addition, we have no idea what the average mortgage rate will be in 5 years, but that might also have an impact on demand. So yes, there could be a cooling in the housing market as inflation and higher interest rates reduce the value of buyers' cash savings. But that's not going to happen this year. It's something worth keeping in mind as you watch the market trends and decide whether or not to invest in real estate. Still, I am positive that this is highly unlikely that we will see another situation similar to 2008 in the near future. For the true bubble to happen, the demand needs to exceed the supply way beyond where it should be. That's what we're seeing today, but this is not the full picture. The authorities and the market itself has learned a lot from the 2008 crisis. Historically, housing bubbles haven't been very common. Although we lived through a crisis in 2008, many of the conditions that caused the 2008 crisis simply do not exist today. For example, lending standards today are a lot more rigid. Back in 2008, speculation was rampant. Popular mortgages with adjustable rates attracted buyers with low introductory interest rates, but rapidly rose once home buyers locked them in. Coupled with the pretty much non-existent lending standards, the conditions back then were ripe for disaster. People bought homes with no down payment. It wasn't even necessary to prove that buyers could even afford the most risky mortgages. The market's different, a lot better regulated these days. So my opinion is that home prices won't fall significantly. Price increases will be more gradual with a rate that will outpace inflation, but not to the extreme as they were this year. According to my estimation, prices will not experience a significant decline within the next 5 years. In the end, we'll see a market reach a more balanced state between buyers and sellers. If you disagree, I would love to hear from you in the comments. Please share your opinions. What will happen to the home prices in the near and not so near future, and why do you think so? So if you want one takeaway from this video, make it this. If you intend to buy a home, you should review all your options right away. Think twice before waiting until home prices drop. You could end up renting for the rest of your life. Remember that home ownership is a key way to build wealth. As always, please make sure that you hit the like button and subscribe if you enjoyed our video, and stay tuned.